Welcome back to the Deep Dive. Today, we're getting into something quite substantial.
We are indeed. It's the 2024 annual report from ING Group NV.
Right. One of you actually shared this with us, and it is, well, it's a big one.
Definitely. You've got the financials, IFRS, Dutch Civil Code.
The KPMG audit report attached.
Exactly. And then all the strategy stuff, sustainability goals. It's really comprehensive.
It gives you a proper look inside a major European bank, doesn't it? More than just spreadsheets.
Absolutely. It tells a story about their strategy, how they're navigating, the current climate and where they see themselves going.
Okay, so our mission for this deep dive, let's call it that, is to kind of sift through all this detail.
Yeah, pull out the key pieces.
We want to understand their main business areas, the financial highlights from 2024, what they're doing for shareholders.
And just get a general feel for their direction, right? Without drowning in the numbers.
Precisely.
Yeah.
So where's the best place to start digging in?
Well, I think understanding their main operating divisions makes sense first. They basically have two core segments.
Yeah.
Wholesale banking and retail banking. Maybe let's kick off with wholesale.
Sounds good. What's their big goal there?
Their ambition is pretty bold. Become the best European wholesale bank.
Best. That's subjective, isn't it? How do they actually define best?
That's a good question. The report actually lays it out. They're talking high net promoter scores, so happy clients, like top quartile.
Okay, customer satisfaction.
Yeah, plus being a leader in sustainability, leading in digital services, being a top employer.
So it's broader than just profit.
And, of course, delivering sustainable financial returns. It's a whole package.
Got it. And what does wholesale banking do day to day?
They provide financial solutions, lending, advisory, capital market stuff, mainly for corporations and other financial institutions. Think big clients.
Right. Covering their whole value chain, the report says.
Exactly. From sourcing raw materials right through to sales. And they talk about this ING difference. Basically, global reach, but with local experts on the ground, trying to offer both perspectives.
Makes sense. And you mentioned sustainability leadership as part of being the best.
Huge focus there. They explicitly want to help their clients get to net zero by 2050.
How are they planning to do that? Just lending money?
It's more than that. Financial support, yes, but also incentives, advice. They mention leveraging their own climate action experience. They even have specific tools mentioned, like Terra and a client transition tool, probably frameworks they use.
Interesting. Any specific targets?
Oh, yes. And they've upped it significantly. They're now aiming for $150 billion in sustainable finance mobilization annually by 2027.
Wow, $150 billion a year. That's up from what?
Their previous goal was $125 billion total by 2025. So this is a massive step up per year. Shows real commitment.
Definitely sends a signal. And digital leadership is also part of that best definition for wholesale.
Yes, absolutely. They see digital as crucial for efficiency and, providing top-tier service in that space.
Okay, clear picture on wholesale. What about the other side, retail banking? How did that perform?
The report breaks retail down by geography: Netherlands, Belgium, Germany, and this other category, which apparently saw strong growth.
And overall, how did retail look in 2024 versus 23?
It was a bit of a mixed bag based on the summary. The overall net result, using IFRS standards, was actually down slightly, about 1%.
Down 1%. But were there any bright spots?
Definitely. Net fee and commission income, that was up a strong 15%. So they're making more money from services, not just interest.
Okay, that's significant. 15% growth in fees is good. What about costs?
Costs were up too. Operating expenses rose by 4%. Inflation, investments, the usual suspects probably.
Right, and loan losses. Did they have to set aside more for bad debts?
Actually, no. The amount set aside, the addition to loan loss provisions, decreased by 7%.
Wow. Why was that? Better economy.
Partly. They mentioned strong asset quality in their loan books, plus they released some of the extra reserves they built up previously.
Those management overlays.
Exactly. And they also cited improvements in the housing market helping things.
So managing risk well, it seems. What about deposits? You mentioned strong growth earlier for the group.
Phenomenal, really. Record net core deposit growth group-wide, $47.4 billion, and that came from both retail and wholesale.
$47 billion. That's huge. What does that mean for their funding?
It means they're very strongly funded by their customers. By the end of 24, customer deposits made up 68% of their balance sheet, very stable base.
68% is solid. Okay, and like wholesale, is retail also heavily focused on digital?
Very much so. The strategy is all about frictionless banking, being available 24/7 through digital channels.
Personalization, too.
Yeah, using data. Even Gen AI mentioned for individual clients to offer more tailored experiences. End-to-end digital processes are the goal.
But still with a human option.
Apparently so, where needed or wanted. They're aiming for digital leadership in private banking and business banking, too.
It sounds like a massive transformation effort. Who's making all this happen? What about their staff?
They position their people as a key enabler, absolutely. The report mentions a big appetite for learning and development among employees in 2024.
So people are engaging with training.
Yeah, voluntary training uptake is trending upwards. They're also focusing on diverse talent pipelines, especially at senior levels, leadership programs.
Like that Global Leadership Accelerator.
Right, with IMD. And they still have their international talent program for new grads, so investing in people is clearly part of the plan.
Makes sense. You can't drive that kind of change without the right team. The report also flags some key enablers for growth.
Yes, sort of the foundations for their growing the difference strategy. We've touched on most, really.
Like,
Providing seamless digital services check, unlocking people's potential check. The others were using scalable tech and operations.
for efficiency, I guess.
Exactly. And the final one, staying safe and secure. Absolutely critical in banking today.
Especially with the digital push. Cybersecurity must be a nightmare. Okay, let's pivot to the overall group financials for 2024. Strong net result, you said.
Yeah, quite strong. 6,392 million net result. Just under 6.4 billion euros.
And that was driven mainly by,
Record total income. They highlighted double-digit growth in fee income, plus strong growth in the actual volume of lending and deposits.
but costs were up too. We established that.
Yes, higher expenses from investing in the business, plus inflation hitting staff costs and other things.
But risk costs were okay.
They said risk costs remain below their through-the-cycle average, so seemingly well-managed credit quality overall.
Okay, let's unpack net interest income, NII.
Eh.
Because that declined, didn't it, by 6%?
It did, down to just over 15 billion. But it's a complex picture underneath.
How so?
Well, the NII from lending actually rose slightly by 139 million, so they lent more, even if the margin wasn't growing much.
Okay, volume help there.
But the NII from liabilities, mostly deposits, fell by 318 million. Deposit growth was strong, but they were likely paying more out on those deposits as rates normalized.
So the margin squeeze on the deposit side.
Pretty much. And then there were bigger hits from financial markets and treasury NII.
Why was that? Higher rates.
Exactly. Higher rates increased funding costs for financial markets. There's some accounting complexity there, too. Apparently, some related income shows up elsewhere.
Right, that asymmetry.
Yeah. And Treasury NII dropped partly because the ECB changed how it pays interest on minimum reserves, and money market conditions were less favorable.
So several moving parts hitting the NII. That explains the overall drop.
Plus a couple of smaller one-offs, a positive 70 million in wholesale, but a negative 39 million hit from that Polish mortgage moratorium issue.
Okay. And the overall net interest margin reflects this pressure.
It does. It fell 11 basis points, down to 1.45% for 2024, mostly driven by those financial markets and treasury effects.
Still, that record deposit growth must be seen as a major positive, funding-wise.
Absolutely. 47.4 billion net core growth, 68% deposit funded. That's a real strength, gives them stability.
And just circling back quickly to risk provisions in retail banking, those were down.
Yes. Net additions fell to 566 million, or only 12 basis points of average lending, driven by good loan quality, releasing some overlays, better housing markets.
And Retail Netherlands even had a small release of provisions.
That's what was noted, yeah. So overall, pretty healthy on the risk front in retail.
Okay, so summing up the financials. Strong fee growth, good volume growth in lending, especially deposits, but headwinds on net interest income due to market rates and funding costs. Risk looks well managed.
That's a fair summary, I think.
Right. Now, shareholder value, always important. What are they doing on dividends and buybacks?
Well, the report confirms they got authorization back in April 24 to buy back shares for 18 months, so until October 2025.
Giving them the option. Are they actually doing it?
Oh, yeah. They canceled shares they'd already bought back.
Yeah.
About 228,000 in 2023 and another 350,000 or so in 2024.
So reducing the share count. That helps earnings per share, potentially the stock price.
Exactly. It's a direct way to return value.
And dividends. That huge net profit, nearly $6.4 billion, suggests they can afford a decent payout, right?
You'd certainly think so. The specific 2024 dividend amount wasn't in the bits we focused on, but yeah, that level of profit usually supports a substantial dividend.
So likely a combination of buybacks and dividends being used.
That seems to be the strategy. You'd need the full report for the exact dividend number, but the capability is clearly there.
Okay, so let's pull it all together. Assessing the business going forward. The tone seems pretty confident.
Yeah, the message is very much we're executing well on our strategy, this growing the difference plan, delivering results, accelerating growth, increasing impact.
And even the employee council sounds positive about 2025.
Yes, the report mentioned they're on board with the strategy's focus growth, sustainability, customer financial health. That internal buy-in is usually a good sign.
And management itself is looking to sharpen its focus.
Seems so. The Management Board Banking, the MBB, agreed actions for 2025 to enhance strategic discussions, bring in more outside perspectives, especially on tech.
So continuous improvement, looking ahead. But it can't all be smooth sailing. What about the challenges and risks they see?
Oh, they list quite a few. Geopolitical risk is high up there. Elections, economic growth worries, conflicts like Ukraine and the Middle East.
All impacting markets, energy prices.
Yeah,
Yeah, the usual global headwinds.
exactly. Then there's cybercrime. Always a threat, maybe even more so with their digital focus, and evolving regulations around cybersecurity.
Constant battle, I imagine.
Anything else major? The benchmark interest rate reforms like WIBOR ending in 2027, that could cause legal operational issues.
Transition risks.
Right. Also general legal and regulatory risks, especially in, let's say, less developed markets, and risks around customer treatment, mis-selling claims.
Compliance is always huge for banks. What about the ESG side? Risks there too.
Yes. Risk of not hitting their own ESG targets, plus the sheer complexity of all the new ESG rules, SFDR, CSRD, taxonomy, U.S. rules. It's a lot to manage.
Keeping up with the alphabet soup of regulations.
Pretty much. And then there are physical climate risks, extreme weather impacting assets or operations, and, of course, the background systemic risk in the financial system.
So definitely not complacent. Aware of a complex risk landscape.
Seems that way. Strong performance now, but eyes wide open about the challenges ahead.
Okay, this has been really useful, I think. We've unpacked the main divisions, wholesale and retail, looked at the key financials, the income drivers, NII pressures, strong deposits, managed risks,
Covered the shareholder return angle with buybacks and likely dividends.
and wrapped up with that forward-look positive momentum, but significant ongoing risks, from geopolitics to climate to regulation.
Yeah, it paints a picture of a large, complex bank trying to balance growth, digital transformation, and sustainability in a really dynamic world.
You really see how intertwined the strategy, the sustainability push, and the financial results are becoming. It's not separate silos anymore.
Absolutely not. It all feeds into each other.
And it just underscores how much information is packed into these annual reports. Hopefully, this deep dive gave you, our listener, a clearer view of ING's 2024 and their path forward.
Hopefully. And maybe leaves you with a final thought to chew on.
Well,
Well, think about it. How does a massive global bank like ING really juggle those pressures, driving financial growth on one hand, but also genuinely leading on sustainability, especially when the world feels so uncertain?
are there inherent trade-offs there?
That's the question, isn't it? What are those trade-offs, and how might we see them play out for ING and others like them in the next few years? Something to ponder.